Traders, in this video we're going to talk about how to trade trading ranges, because trading ranges are a very common occurrence on the chart market. For the most part is in some form of a trading range, and when it comes to trading ranges we need to understand that we need to follow the price action trading range rule, which says that the most breakouts of trading ranges will fail. But how do we identify these breakouts? First, we need to identify the support and the resistance, the key levels, because they will come into play. You guys can see this is the low of the day and this is the high of the day, and these lines are coming into play throughout the entire day. So these are the key levels that you are going to draw, and price will break out of these key levels and you expect for price to pull back into a trading range. Also, what I have to keep in mind when I see a trading range structure is that I'm drawing my short-term trend lines very tight and very short-term. I'm not drawing the trend lines wider like this, even though I can sometimes get a lot of confirmations, because these larger and broader, wider channels are not reliable in trading ranges. You want to follow the short-term ones so you can clearly see, break, and move to a new extreme. Now, this is the pre-market structure that we would see before we would start trading today, before regular US stock market open. And the first thing we need to do is we need to do our pre-market analysis. So we need to identify the support, identify the high of the day, the resistance, and I can see this is clearly a trading range structure. This is why I'm identifying these key levels, because EMA is flat and price is swinging up and down, up and down, up and down consistently. So as price is breaking to the downside, I expect for price to sooner or later pull back into this trading range, following the trading range rule. Also notice price pushed lower, created a break, and new extreme was formed, which is telling you that this downtrend is over. Now, however, if I'm going to look at the hard right side of the chart like this is still looking quite bearish, because price is failing to reach the resistance. And we keep creating highs that keep pushing lower and lower, and each high is lower than the previous one. And price is failing to reach the resistance, which is potentially indicating bearish imbalance. So I don't think it is great to take this failed breakout just yet. You guys can see it still worked perfectly, but it's a little bit better to wait for confirmation. However, if you took this trade, you still follow the rules. But notice what happened next. Price created a second entry short. Now, two-legged pullback with the direction of a trend is a high probability setup, but the downtrend played out. So second entry short is not with the direction of a trend, and you expect for price to pull back into a trading range. So the failed second entry short is now a trap. Great bullish signal bar, and this is a trap that you want to go long, because a lot of people get trapped going short below the trading range. It would have been better had the bar closed above EMA, but in trading ranges you can take a trap like this because you're coming from the failed breakout and the signal bar is looking really great. Now notice what price created: micro double top, which resets the count, and the first entry long pullback, second entry long. What is the trend now? The trend is bullish. We're coming from failed breakout. We pushed above this support, and the EMA keeps holding price. So two key entry points are holding price. However, this entry is way too big to enter, because your stop loss has to go one tick below this bar right here. This is the swing that you would have to put your stop loss below. You cannot put the swing here. You have to put it here. So this would be way too big compared to risk to reward ratio. So in this instance, you just have to be patient and you have to sit this one out. Now, market created first entry long, second entry long, but in this instance, you just had a break in a new high of the short-term uptrend, so you need more confirmation. EMA is confirming that it keeps holding price. The buyers are still in the market from the failed breakout, and price formed a high low, which is a lot of times great entry after second entry long. But notice how many bars are working stacked next to each other. This is really tempting and borderline being marked. Had there been fewer bars, that this wouldn't look so congested. It would have been a high probability setup, no brainer. But once it's stacked like this, you have to be a little bit careful. But notice what happened next. Price broke higher, pulled back, and it gave you a failed second entry short. New low form after two-legged pullback. First entry short, second entry short. Now this larger trend line is confirmed. EMA keeps holding price, and it's a little breakout pullback, still bullish reversal bar, and this is now a failed second entry short. And you're with the direction of a trend, and this is a great high probability setup, and look at it go. Now notice the overshoot, and notice we even have overshoot right here, and notice how overshoots, they look like exhaustion move. Notice how deep and steep these moves are. Overshoot a lot of times lead to break of a trend line or possibly straight up reversal. Now notice trading range rule still coming into play. Price formed a breakout above the key level and it pulled back into trading range. But right now this uptrend is still in play despite the fact that we have overshoot. So this is not a great short just, and you guys can see what would have happened. This is why you have to respect the overshoot and you have to respect the current uptrend. You would have gotten stopped out right here just to see it go where you thought it was going to go. But that's because this uptrend is still in play despite the fact that you have overshoot. Now, Price eventually broke the uptrend, and now we have even overshoot for the downtrend. So that means that the downtrend needs to probably get a break of the channel, or possibly reverse, because that's what overshoot leads to. And this uptrend is probably going to get a break or reversal at the same time. And here we have even 3 conflicting patterns. Uptrend needs new high, downtrend needs new low, but we have overshoot here, we have overshoot here, and we are coming from the trading range from the failed breakout. So when you have these many conflicting patterns, you have to be patient. You're coming from the failed breakout, which is the trading range is the bigger pattern, and you're combining this trading range with the bigger trend, which is up. So you expect for price to push lower. However, because you have overshoot of this downtrend, you guys can see what can happen. It can take a little bit more time because market just can't break the trend line or possibly reverse. So in this instance, there are multiple patterns, and when you're unsure, you need to be patient. Price strongly pushed lower, the key level reacted, a strongly push up, and now we're coming into no man's land. We can see that right now price is working in the middle of this trading range, which is what I call a no man's land. What is a no man's land? This is a place on the chart, basically in the middle of a trading range, where you cannot really determine and put a finger on which trend is currently valid. You guys can see that there are multiple trends with breaks and new extremes, but price still keeps hovering around. You're not close to these key levels, which is where you want to find your trades, because you want to buy low and you want to sell high. But after this uptrend created a break and new high, I don't think we want to look for longs. Downtrend created a break and a new low. Now price keeps creating series of lower highs and lower lows, and price can new high, first entry long, second entry long, and I can treat it as a first entry short, second entry short. This was very tempting, but we have to skip this entry for obvious reason, and that is a congestion. Because EMA is in the middle of these bars, we have 10 bars stacked right next to each other, and you're playing with fire going short inside of this congestion. So this is the area on the chart where it is better to sit it out, because market will sooner or later come to your key levels, and in trading ranges, according to rules, you want to buy low and sell high. But you guys can see why we are drawing the shortened channels, because we want to see breaks and new extremes, because trendline rule says after breakout trendline we expect new extremes. So tempting trade right here. You're probably pushing lower, see lower highs kept being formed, but too much of a congestion. Same thing right here. We have a shortened uptrend working higher that needs to get new extreme. 6 bars stacked next to each other, getting stacked. Market pushed higher. I'm going to redraw the shortened channel because it really started from this point on. And notice what we have: new high, first entry long, second entry long, far away from EMA. I cannot take it. But this uptrend right now needs to get new extreme. So we have a higher low confirmation setup of a second entry long, but this higher low is way too big, so close to this key level of the day. And you guys can see what can happen. You can get a failed breakout potentially, because market is most likely going to bounce from the top and go all the way down to the support. And then we even form new low, first entry short, second entry short failure. Now this is extremely tempting trade. Only reason why I'm not marking this failed second entry short as a high probability setup is because it is really close to this resistance. Normally, had this formed slightly lower, had this bar been closer to EMA, this would have been easily high probability setup, because at this point on, this uptrend still needs to get new extreme, and EMA keeps holding price. And this is such a great bullish bar. So failed second entry short is going to trap a lot of early pickers who are not following the trendline rule. Just because you're at the resistance doesn't mean you can blindly sell just yet. You always follow the trendline rule and see if you get a break and a new extreme. And once you get a break and new extreme, and this high is higher than this, you break above the resistance, price pull back, indicating strong bearish momentum, and this is a failed breakout. Same thing that happened right here, and same thing that happened right here. This time uptrend played out, so this is a great high probability setup. Market push lower, and since you're coming from the failed breakout, what you expect for price to go in the opposite direction, and market form new low, first entry short, second entry short, new high, first entry long, second entry long. Now there's probably a micro entry inside of this, but I'm looking at this on a slightly larger frame because this is a big bearish bar and this is another big bearish bar. So this is why I'm calling it 2 high probability setups in one. Very tempting trade. Context wise, you expect for price go from failed breakout all the way down here. This downtrend needs new low, but because of this reason, congestion, multiple bars stacked, EMA in the middle of these bars, you have to be patient here. So we already have multiple trades context wise we would like to take. Unfortunately, the congestion made it unenterable, which is one of the rules as well. You want to be patient when market is in congestion. Market eventually broke lower, and notice how the momentum right now shifted. All the time inside this trading range, price even inside of these channels is swinging up and down, and there are pullbacks. Right here there are very minimal pullback. This is just one steep big leg down. So you guys can see, if I'm going to look on the right side of the chart like this, notice how far away we are pushing lower from this trading range. And you expect for price to get a failed breakout potentially, but once you're this far down, this is where you have to forget about this, because now you move too far down from this trading range. The failed breakout is always supposed to happen right close to the key level. This downtrend is in play, it's too far down, and right now you're shifting into bearish mode because the structure is bearish. Notice how EMA is pointing down without any significant pullback. And right now our goal is to get a two-legged pullback at the key entry point, because market needs new extreme. New low formed, first entry short pullback, second entry short, and there was no trigger right here below this bar right here. I was about to go short had we gotten trigger below this bar right here. It is off the EMA, uptrend played out with the break-in new high, indicating buyers are over, and downtrend is new low. There was no trigger, it stalled, and it stalled again, and by this time you get this bar right here, second entry short, you got 8 bars stacked next to each other, and this is why you cannot enter this. If you took this entry right here, I can 100% see why, because you expect new low, EMA keeps holding price, the uptrend has had a new extreme, but by this time you're really supposed to get trigger below this bar right here, and at that point notice how stacked this area looks, and notice how EMA is getting flat. This is a congestion. You guys can see what can happen. Price will break out, most breakout of congestion will fail, and price will push lower. Now EMA keeps working sideways, and you guys can see how the structure is shifting. However, downtrend still needs to get new extreme. So I'm just looking for any opportunity, safe opportunity to sell according to rules. This is right now a shortened trading range. EMA getting flat, price is swinging up and down. I'm drawing these shortened channels. I'm not looking to go long at all because the overall bias is down. We traded down. There was a break, new high, and price created a second entry short off the range highs. You guys can see you buy low, sell high, and the overall bias is bearish. So you're selling with the overall trend, and you're selling at the top of a trading range. And this is a second entry short, and uptrend played out with a breaking new high, and this is a great signal bar, high probability setup, and market push lower. When I was watching this, I wasn't a fan of this lower high because I haven't had my trend line in play. But you guys can see, you can find the trend line after this second entry short, and this would give more confidence in the bearish bias. And this is now a breakout pullback. Price broke below this support, pullback, and gave you a lower high confirmation setup. EMA keeps holding price, strong bearish signal bar. Now the bigger pattern got confirmed after the correction played out, and a great high probability setup. The bearish bias doesn't end. I'm drawing my shortened trend lines because I want to follow the breaks and new extreme. Break, new extreme for the uptrend, so buyers are over. At this point on, I see a first break of a downtrend. So according to trendline rule, I expect to get new extreme for the downtrend. Safe way for me to sell is to get reversal pattern, failed second entry short below EMA, new high, only first entry long, new high, micro double top, need to reset the count, first entry long, another reset the count, first entry long, push below EMA confirming the bearish momentum, second entry long, failure. Great bearish reversal bar, downtrend still in play, needs to get new extreme, quadruple top, failed second entry long, overall bias is still bearish, you expect new low following the trendline rule. It is getting a little bit flat, so if you were patient throughout this area, you didn't do nothing wrong, because at this point on it is getting a little bit flat. You're playing the possibilities here. You're betting on the bearish bias because it's looking really strong, because at this point on the downtrend is proven and is strong. And the failed second entry long is really tempting, so this is a decent setup in my opinion. A lower high can confirm a failed second entry long is a high probability setup. However, the big bullish bar that closed above EMA kind of made it not the safest. This would have been better had the lower high closed below EMA. But once again, lower high confirming failed second entry long, and the downtrend still needs to get new low. Decent setup regardless. After price created new low of this downtrend, what comes next? Reversal or possibly correction. And you guys can see EMA getting flat, and we have a correction phase. We are not reversing any stronger. right now, uptrend handle breaking a new extreme. And notice we actually had a first entry long pullback, second entry long, two-legged pullback, downtrend played out with the break and new low. So this is a high probability setup. Market keeps pushing lower, so I'm going to redraw my trend lines. When trading ranges, before you start trading, identify the key levels and you understand it is a trading range. When you're unsure to identify the trend, every single time you're unclear about what kind of trend it is, you're most likely in some form of a trading range, so you can never go wrong by playing it as a trading range. Stick to the tighter trend lines, don't draw them extremely wide and broad like this. Buy low, sell high. Avoid for the most part trading in the middle, because this is quite confusing. Multiple breaks and new extremes, it's hard to put the finger which trend is in play. And you guys can see after price breaks far below the key level, this is where a new trend started, and you're following the trend line. After price created a break, new extreme was formed. Now I'm gonna wrap it up. I went through this a little bit quicker because I'm really feeling under the weather and my throat is killing me. My voice is a little bit hoarse, so I apologize. Normally on Wednesdays I record my trades, but today I wasn't feeling great. I really needed to have no pressure and just be more relaxed. So for that reason, I'm gonna record my trades in the future, and I hope you had a great trading day. I'm gonna see you guys next time. Take care, everybody.